What's up, you guys? All right, so I'll put the link here for the YouTube in case you guys want to share with anyone. But if anyone wants to hop on, just tell them to hop on the Zoom. It's probably going to be easier so we can see their questions or anything like that. I can't monitor the YouTube right now, so if there's questions being posted in the YouTube, I'm not going to be able to answer them. So if you guys can just access the Zoom, it'll probably be better. But all right, guys, so let's get started. Get this up real quick. All right, so let me just close this. All right, guys, so let's start off with the new K² pivots indicator. So if you guys have access to the K² indicators, you guys will have access to this new indicator that I just released yesterday. So basically, the K² pivots indicator could be used for a lot of different things. So one of the main things that it could be used for is to determine the trend and how strong the trend is. So you can see right here, generally, I'll just zoom out. So generally, if price is above all of the pivots, it generally trends up for a while. Similar with the lower end. So if it trends down this way, you can see that it's in a strong downtrend. That's just one way of applying the indicator if you don't want to use oh, sorry guys, I just saw some news right now. I just want to make sure it's not something affecting our trades. I don't think it's anything. All right, cool. So let me keep going through this. So yeah, pretty much the indicator can be used one way to identify how strong a trend is. So you can see right here, if price breaks below, as you can see, there's 4 different levels of the K² pivots. Level 1 is going to be green, which is the first level. Level 2 is going to be yellow. The third level is going to be orange, and the fourth level is going to be red. So if price goes below all the pivots and the pivots are spread out like it is right here, you can see it establishes a pretty strong trend downwards. Similar with the opposite direction, you can see right here price switched above, but the pivots were kind of jumbled together. So when they're jumbled together like this, it doesn't look very clean. And when it doesn't look clean, it kind of gives you the idea that the trend isn't very strong because price can go in between. But again, right here, you can see price broke above right here, and then the K² pivots were spread out. So we have the green one right here, which is level 1. Yellow level 2, orange level 3, and red level 4. So you can see right here, as these started to spread out, you can see the trend went upwards for, let's see how long is this. So the trend started right here, and it went up for about 11 days. So that's a pretty strong trend. Similar right here, you can see price kind of retraced down, but there was no strong trend right there because it just consolidated and then retraced back the other direction. Again, right here, you can see the K² pivots spread out again. And the way to identify it is, they're color coordinated. So it goes from light to heavy. So, the light pivots are down here, the heavy pivots are up here. You can, and the way that they're colored are colored in that specific reason, because, green will be, it's not in danger yet. Yellow is sort of getting there. Orange, it's kind of pushing, and red is in danger because once it passes red, odds are price is probably going to be shifting in trend. But you can see right here, like I said earlier, when they spread out, you can see a nice smooth trend. Right here is not very smooth because you can see the pivots haven't crossed each other yet. Again, right here, price crossed above, and then the pivots started to spread out into their respective areas, and price pretty much trended upwards for, let's see, for about 21 days, an entire month. Similar again right here. And then as you can see right here, this is why a lot of people are having issues with US 30. Without the indicator, it's kind of hard to see what's going on because everything here just looks normal. Like it doesn't look like there's anything wrong with the chart, right? It just looks like price is in a downward trend. So if you draw these parallel lines, it looks like price is in a downward trend. And this is how a normal trader would look at the market because they don't have the K² indicator. So if you turn on the K² indicator, pivots indicator, you can see that the market's actually a mess right now. There's no distinctive trend going on because you can see prices going in between and it's not moving smoothly. like it did over here. So right here, it's moving smoothly. Right here, it pulled down a little bit for a little bit of a drawdown, then it corrected back upwards, and then now it's pretty much in consolidation. But if you guys didn't have the indicator, you know, it would look normal. Someone would think that this is probably trending down, just like I said earlier. So that's just one way to use it. The real way to use it, though, you know, in conjunction with determining when to enter a trade, is you'll be using it with the K2 momentum indicator. So in this situation, you'll be able to identify which direction trend is moving, and then with the K2 momentum indicator, you're going to be able to identify the direction of price, you know, for that specific time. So this can be used on all time frames. So right here is the 4-hour time frame. I'll just take off the indicator right now so you can just see how price moves. You can see price respects the K2 pivots pretty nicely. So this is the 4-hour. You can go down to the 1-hour. You know, same difference. You can see it's choppy right here. You can see the trend's pretty nice down here. Trend's pretty nice up here. And you can also tie this together with the K2 trend meter. So although you can see the trend on the 1-hour, you can also see the trend on, you know, 4 different time frames down here. Sorry, guys. So on the bottom, you can see the trend down here with the trend meter that gives you the overall trend on 4 different time frames. So if you guys aren't familiar with the K2 trend meter, basically down here, the K2 trend meter allows you to see the overall trend on 4 different time frames. So you can set the time frames to however you want. If you're scalping, you can use the lower time frames. If you trade intraday like I do, you can change it to the intraday settings, which is generally the 30-minute, 1-hour, 2-hour, and 4-hour. Or if you guys are going to be swing trading, you can also change it, you know, to the 4-hour, daily, weekly, monthly. But you know, for demonstrational purposes, I'm going to leave it with intraday because I don't really trade swing. I don't really like pulling trades for that long. But if you tie those together, you can see here, you know, if the overall trend is green and, you know, it's trending up pretty nice with the pivots, you know, that'll give you nice confirmation that price is going to be continuing upwards. Again, right here, price broke below, and then, you know, right here, the trend meter is red. Obviously, price was trending downwards. But like I was mentioning earlier, the K2 pivots indicator works on all time frames. So this is the 1-hour time frame. You can see, you know, price got a little messy right here. And the thing with this is, if you don't, like I mentioned earlier, if you don't have the indicator, you can't really see what's going on the chart. It kind of just looks normal to you. But if you add the K2 pivots indicator, you'd be able to see that, you know, this is probably not a good time to trade because, you know, there's no overall trend. It's trending up a little bit, but, you know, not so much. Similar to how it is right now. Like right here is trending down. And then a lot of people are asking, you know, if US30 is a buy or sell right now. It's kind of hard to tell because the level 4 K2 pivot is way up here and the other pivots haven't crossed yet. So that's the 1-hour, and then you can even go lower. So if you want to trade on the 30-minute, works perfectly fine on the 30-minute as well. So you can see right here, obviously there's gonna be a little more noise because it's on a lower time frame, but it still works perfectly fine. You can detect the direction of trend this way. You can detect the direction of trend in this way as well. And then if you guys want to scalp, you guys can even go in the lower time frames, like a 10-minute. Works perfectly fine right here. But okay, so since I broke down, you know, the way that you can identify trend using the K2 pivots indicator, now I'm going to show you guys how you guys can enter trades using the K2 pivots indicator. So I'll go from top down. Right now, you know, on the lower time frame, it's going to be harder for you to really determine entries unless you're scalping, and you know, not everyone here knows how to scalp properly. So I'm going to start with the higher time frames, like the 4-hour, and then I'll move my way down to scalping. So let's go to the 4-hour. So the way to use this with the K2 momentum indicator, turn it on. Basically, this strategy is going to be based on trend continuation, similar to the other K2 strategies that we apply. You know, basically all of our strategies that we apply using K2 are based on momentum, and we definitely want to trade in the direction of trend. So if you want to tie in the trend meter below, you know, this will give you extra confirmation, but it's not so necessary because you can use the K2 pivots indicator to determine, you know, the direction of trend. So let me, yeah, I'm getting there. So just hang on a little bit. All right, so Dion asked, can you show the K2 pivot with an active trade? So I'll just show you one right now. Let's see what's an active trade. So I'll just show you a quick example, but I'm gonna go more into detail, how it's identified. Okay, so right here, basically what you wanna do is you wanna take a trade when price is trending heavily. And how I mentioned earlier, price is trending heavily when price is above all the K2 pivots, and the K2 pivots are spread out like how it is right here. And as I mentioned earlier, I'll just type it up here so you guys can remember. K2 pivot levels. So level 1 is going to be green. Let's do it, yeah. So they're going to be leveled by degrees. So the higher the level, the stronger the pivot level. So level 1's green, level 2 is yellow, level 3 is orange, and level 4 is going to be red. So as price gets closer to the higher levels, obviously, the pivot's going to be a lot stronger, and you're going to see a stronger rejection off it. So pretty much the way that you would enter a trade using the K2 pivots is you want to make sure and identify that price is actually trending in a direction, because it's a trend continuation strategy. So you don't want to be trading when price is messy like how it is right here, because there's no direction for you to trade. Even though you take let's say like a buy signal right here, but price isn't trending because you can see everything's jumbled up right here. This would have been a loss. Similar with right here. If you took this trade right here and price wasn't trending, price is just consolidating, this would probably be a loss as well, or maybe not, let's see. But this probably would still be running. Yeah, it would still be running, but it got close to stop loss right there. So the thing is, number one key is so I'll just leave the levels here, and then I'm just gonna put the rules for the strategy here, K2 pivots strategy. So 1, identify market is trending. So the way to identify market is trending, price is above, below all K2 pivots, and pivots are spread out. So that's number 1. Next, you want to identify pullback, price pullback. So this is going to be a little detailed. It doesn't need to be this detailed, but I'm just going to break it down for you guys so you guys can understand it better. And then next, you want to identify price rejection off K2 pivot level. And then lastly, identify valid K2 signal. And then number 5, enter on open of falling candle. So, as all K2 strategies work, basically once all of the requirements are met, what you want to do is you want to enter on the open of the falling candle. And then obviously after that, you're going to set your stop loss and TP. And then your stop loss is going to be placed at the previous swing. So I'm not going to go over those in detail because I'm sure most of you guys understand that already. So I'm just going to show you guys an example of how an entry is made. So as you can see right here, price is trending upwards. And so for 1, you want to identify market is trending. So the way to identify that is if price is above, I spelled below. So you want to identify if the market's trending, and in order to do that, you are going to make sure that price is above or below all K2 pivots, and that the pivots are spread out. So as you can see right here, price is above all 4 pivots right here, and you can see that they're all spread out. So level 1's green, level 2 is yellow, level 3 is orange, and level 3 is red. So pretty much price is trending up right here. And then next, you want to identify a price pullback. So obviously, if price is trending upwards, a pullback would be as if as if price was to pull back in the opposite direction. So you can see right here, price pulled back a little bit. So requirement 1 is met because price is trending upwards. Requirement number 2 is met because you identified a price pullback, which happened right here. I'll just draw this so you guys have better visualization. So this is a little pullback right here, in the opposite direction trend. And next, you want to identify price rejection off a K2 pivot level. So depending on which level you see the rejection, obviously the higher the level, the stronger the rejection, because you can see right here, price barely rejects off this pivot level here, but as it rejects off, it just keeps pushing up. Well, actually, this would be an entry right here too. Well, we can go over this later, but I'm just going to go over this one since we're here already. So number 1, you identified the market was trending upwards. Number 2, you identified a price pullback. Right here, price pulled back. Number 3, you want to identify a rejection off a K2 pivot level. Let me just delete this real quick. You can see right here, price came down. This is the low point of the pullback. So price came down, pulled back, rejected off the level 3 pivot level, which is orange. So, that's one of the higher pivot levels. So if price rejects off that level, that identifies that, price is rejecting and then it's going to be correcting back to the overall trend. So as you can see right here, price rejected and then shot up a little bit and then consolidated a little bit right here sideways. And then requirement number 4, you want to identify a valid K2 signal. So as I mentioned before, a valid K2 signal is when you get a buy signal and the candle is bullish green. So this would be a valid buy. This would be a valid sell signal, but it's against the trend, so you wouldn't take that trade. Again, right here, this is a valid buy because it's a buy signal with a green bullish candle. And as you can see, price shot up because it was valid and it was going with the trend. I'll show you guys an invalid signal if I could find one. Let's see. We're on the higher time frame, so it's a little harder for us to find an invalid signal because a lot of these signals are pretty proper. But I'll show you, I don't see anything here, but I'll show you guys an invalid signal a little later. But basically, what makes a signal invalid is if it's a green buy signal, but the candle's red. Obviously that would be invalid because momentum is indicating that price is going upwards, but the actual price isn't demonstrating that because it's moving the opposite direction. I don't think I see. Okay, so right here. So right here we have a sell signal, but it's a green bullish candle. So obviously this wouldn't be a sell because price is going upwards. How could it be a sell? Price is going upwards. Again, right here, and you can see that it wasn't a correct signal because price went the opposite direction. So right here it's saying that price is going up. That price is going down, but price actually went up. Again, right here, price it gave a sell signal, and although it came down later, these are 4-hour candles. So for 8 hours, price pretty much went up. So you can see right there, price went up, 2,000 pips, and that just that's just going to help you identify whether momentum is proper or not. But yeah, back to the requirements. Okay, so number 1, you identified market was trending upwards. Right here, you can see price is trending up because it's above all the K2 pivots, and the pivots are spread out. So it's a strong upwards trend. Next, we identified a price pullback right here because price was trending upwards, then it pulled back slightly, and then it corrected right here. So after this pullback, we wanted to identify a price rejection off a K2 pivot level. So right here, as price came down, there's a strong rejection off this level 3 pivot level right here. Lastly, we want to identify a valid K2 signal so you know what direction momentum is moving. So right here, we identified all requirements, and then we have a valid K2 buy signal right here in the direction of the trend, confirming confirmation. So next, we're going to enter on the open of the following candle, enter a buy position right here, place our stop loss at the previous swing, which is somewhere around here. And we'll just round that up to 5,600. And then as easy as that. And then you don't even have to have a TP. Like in this situation, you could have, there's a lot of ways to apply your exit strategy. So one way is to, obviously put a TP. Another way is to trail your stop. Another way that's a little more advanced, but it can make you a ton of money is, so as price moves above, you can move your stop loss at the so we entered at this right here, right? Our stop loss was originally at the previous swing down here. And then as price moved up, you can just move your stop loss to where the pivots are, because obviously when price gets to the pivots, you know, odds are price is probably going to reverse like it did right here. So as price continues to move up, you can leave your pivot at, you know, the level 3 right here. So as it keeps moving up, or you can even leave it at the level 2 right here. Or I wouldn't leave it at the level 1. That's a little too close. I think level 3 would probably be the best. So as price continues to move up, you just keep sliding your stop loss to the level 3 pivot, because these pivots are dynamic. As price moves, it continues. So as you can see, you keep moving price up, keep moving your stop loss up, keep moving it up, and then moving it up right here. And then as soon as price came down right here, you would have gone stopped out somewhere around this area. So if you rode that all the way up from this entry right here, you would have locked in 12,556 pips. So this is a huge move. You can do this move like once, and this would make your entire month basically. You know, if you're trading US 30. But yeah, let me go back to the questions. James said enter at market, or so yeah, pretty much if you're watching it and you're waiting for the candle to close, which is, you know, what I would generally do, you can enter at market right when the candle closes. If you don't enter right at that time, you can just enter. So say price shot up above, right? If price shot up above, you could enter with a limit order. So as price shot up and then it came back down, it would have triggered your order, and then you would have been in the trade. So it just really depends on you know, the time that you enter the trade. But there's no specific way to enter it. Generally, I would, since it's on the 4-hour chart, or even if you're scalping, I would just be watching it, and then as the candle closed, I would just enter at market. But it would just really depend on you with regard to, you know, when you plan on entering the trade. Let's see. Sam said this seems super similar to alligator, huh? With a 4th pivot line. I'm not sure, Sam. I've never used alligator before, so I can't really answer that. Is that like an indicator? Let me see if I can find it on here. Williams alligator, is this it? Let's see. So let me so it looks kind of similar, but it doesn't really look Michael said Sam is an IML agent. Alligator is from oh man, like, you're funny. Let's see. Josh just got on. Hopefully, he can do a bunch. Yeah, I'll do some more examples, Josh. But yeah, so looking at the alligator, it looks kind of similar, but it doesn't really look it doesn't look as accurate, honestly. I don't know, to me, because look, it looks kind of, and this is a 4-hour chart, so you'd expect a 4-hour chart to be a lot cleaner, but you can see right there, it's not really spread out, so it's kind of hard to tell if price is just moving in, you know, if it's just a small retracement or if it's an actual shift in trend. So this is the alligator indicator that that Sam mentioned. Let me close this. So this is, let me close this so it's a lot easier. So you can see right here, it looks kind of similar, but okay, and the numbers are different. So let's see. Yeah, honestly, I've never even used this before. So these are a lot of different numbers that I don't even know. Yeah, I don't know. It's kind of weird because there's all these numbers, but there's only 3 lines. So that's the alligator indicator, and this is the K2 pivots indicator. So it does look similar, but I feel like it's not as, I don't know. You guys can be the judge of that. I've never used an indicator, so I'm not sure what it, if it's similar enough or if it's a little different. Let's see. Michael's asking, can you go over the pivots with EA? Yeah, I'll go over that one next. I'll just use US 30 for now, just to go down to show, you know, basic examples, because it's a highly volatile pair. So it's going to be easy for us to detect. Looks shitty. But yeah, Patricia said K2 indicator seems much smoother and shows a better trend. Yeah, that's what I was thinking too, because you can see right here, I mean, it does work, it shows you, but it doesn't, I feel like it's kind of harder for you to identify how it actually because I'm not sure if alligator is based on pivots too. But so look, this is the alligator right here. Let's delete this line. This is alligator, and then I'll turn on pivots. So I see it seems like the pivots are a little more accurate. But yeah, Sam could be right. I'm not familiar with alligator, so it might be, similar concept. But the K2 pivots has an extra. Oh, James said when trend changes, alligator signals too late. Gotcha. Yeah, and that's why we tie this in with the K2 indicator. So if you're just trading like this, it's kind of hard to determine when to make an entry. But if you're using the K2 indicator, it shows you exactly where to enter. So it gives you like a huge advantage as when to enter. A lot of these indicators that you use are supposed to be tied with another indicator anyways. So let me take off the K2 pivots. Yeah, I mean it doesn't really, it does work, but I feel like I would make more mistakes if I was using the alligator indicator because it just doesn't look as clean as the pivots. It just kind of looks like loose lines around. But if we turn on the pivots indicator, you can see because since it's color coordinated this way, you can kind of see what's a strong pivot line and what's the less impacted one. But yeah, I mean that was a cool indicator, Sam. I've never seen that one before, alligator. Okay, but let's keep going. Let's see if I missed any questions. Yeah, Michael's asking about EA, so I'll go look at that. Chevelle said, for a sell, is it the same color pattern over candles? Hey, Chevelle, are you talking, or Chevelle, sorry, are you asking about the K2 momentum indicator, or are you talking about the pivots indicator? So your question said, for a sell, is it the same color pattern over candles? So I don't know. I think you're talking about the momentum indicator. So yeah, if it's a sell signal and it has a red bearish candle, then that would be a valid sell. Right here we have a red sell candle. I mean a red sell signal, but it's a green bullish candle. So in this situation, it'd be invalid. Let me see if she. Yeah, Chevelle, if you could confirm, for momentum. Yeah, so for momentum, like I said here, if it's a sell signal, in order for it to be valid, it would have to be a red bearish candle. This would be invalid here because it's a sell signal with a green bullish candle. So yeah, you're right about that one. Let's see, we have a couple other questions here. Chevelle said for sell, it's red, orange, yellow, or green. No, so these the momentum indicator and the pivots indicator are totally different indicators. So I don't know if you were here earlier when I discussed how it works, but for the pivots indicator, these don't identify whether to buy or sell. This just identifies where price is going to reject from. So here, let me see if I could. So as you can see right here, price was pushing up and it came down and it rejected off this pivot right here, and then it shot up. This doesn't tell you to buy. What tells you to buy is the momentum indicator. So these vertical lines are going to tell you when to enter a trade. The K2 pivots indicator only tells you, I mean, you can use it to buy as well, but I wouldn't just buy just off the rejections because it doesn't give you, that confirmation you need to enter a trade. Although it does work, so if it does reject off this point, you could always enter a buy. But I wouldn't enter a trade based off that because you can see right here, as price came down, it came up, rejected off here, but it didn't come down. So see, price came down, it came up, and there was some nice rejection here, and you could have entered a sell here, but you would have gone stopped out because it just reversed on you. So I wouldn't enter based off that. They're both used for different things, but it can be used for extra confirmation if you're going to be entering in a specific direction. But the pivot indicators are basically used to identify, where price is going to be rejecting from. So you can see right here, price is trending up, came down, rejected, came up, came down, rejected, came up, came down, rejected, and came up. So that's one of the ways to apply it. But if you tie it with the momentum indicator, this works out a lot better because you can see price came up, came down, rejected, and then instead of entering down here, you would have entered right here. So you'd have full confirmation that price rejected off the pivot and momentum is moving upwards. So I don't know if that makes sense for you, but yeah, if you apply it yourself and then you try it out, I think it'll make a lot more sense rather than just you listening to me explain it. It's gonna with every strategy you'll learn it a lot better when you actually apply it. Lester's asking, you don't use the K2 trend meter. You don't need to, but you can. So you can see right here, if you use the trend meter, it'll give you extra confirmation that price is trending upwards. But if you can identify, you can easily identify if price is trending if price is above all K2 pivot levels and the pivots are spread out. But if you want to have extra confirmation, you can always turn on the K2 trend meter and it'll show you right there and confirm that price is trending upwards. But it's all optional. For me, I like to keep things simple and I like to keep my charts pretty clean. So generally, I like to just leave it with minimal indicators if it's not 100% necessary. But if you want to be extra careful, feel free. It's really up to your choice. Mark said, I like the pivots and the trend lines. Yeah, the pivots help out a lot because it shows you the direction of trend without even drawing trend lines. So if you were to draw a trend line from down here, obviously price is trending up. But this just makes things a whole lot easier because instead of drawing these trend lines, you can see exactly where price rejects from. And then on top of that, you can also apply the K2SR indicator. And that'll even give you more confirmation down here as price came down, rejected from this area, and then came on up. But I'm going to make videos specifically explaining, how to do everything. I'm just going to be showing you guys, like a basic overview of how the strategy works just for now. So let me keep going down the questions. So yeah, this is just an example of a 4-hour chart. I'll just go over one more quick example, and then I'll go to the lower time frames, and then I'll go to EA to answer Mike's question. So let's see right here, price is trending up, and then I'll do the opposite. So right here, price is trending down. So price is clearly trending down right here. Let me move the requirements over here again so we can see. All right, so let's go over this real quick. All right, so you want to identify markets trending. Right here, obviously, price is trending downwards. We know that because price is below all K2 pivots, and the pivots are spread out. So you can see right here, green, yellow, orange, and red, they're pretty spread out. It shows a strong overall downtrend. Next, you want to identify a price pullback. So right here, price is trending downwards, and then price pulled back right over here, came back down, pulled back again right over here. So number one, we identified a downtrend. Number two, we identified a pullback. There's a pullback right here, came back down, corrected, pulled back again right here, and then corrected back down. So right there, we identified a pullback. First two requirements are met. Next, we want to identify price rejection off a K2 pivot level. So like I mentioned earlier, there's 4 different levels. There's a green level, level 1, level 2 is yellow, level 3 is orange, and level 4 is red. The higher the level, the stronger the pivot rejection. So right here, you can see price came up, rejected off this, came back down, came back up again, and then rejected off the level 4 one more time. So the first 3 requirements were met. Right here, we identified the market was trending down. Next, we identified a price pullback right here as price is going the opposite direction trend. And third, we identified a price rejection off a K2 pivot level. So price rejected off the level 4 level 4 K2 pivot up here. And next, we want to identify a valid K2 signal. So right here is a valid K2 sell signal. And since all requirements are met, we can enter on the open of the falling candle. Depending if you're watching this, as this candle closes right here, the signal candle, you can enter market. If not, you can enter a limit order or a buy stop or a sell stop order, depending on where price is at the time of entry. But anyways, if you're going to enter on the open of the falling candle, which is right here, you'll put the stop loss at the previous swing right here, about 10,000 pips. So we'll just round that up to 10,000. And right here, 10,000. And then you can see right here, price comes down and hits TP. Or if you want to do what I mentioned earlier, you want to just move your stop loss manually. So our stop loss would have been up here originally, and then you could just move your stop loss as price moves down. So we entered right here, right? As price moves down, you can adjust your stop loss at the pivot levels. So you have it at level 4 right now. You can move it to level 3 if you want. These are the 2 levels that I recommend to move it to. I wouldn't move it to level 1 or 2 because it's a little too close. You can see how your price came down, kind of pulled back a little bit right here. It would have stopped you out. So if you left it at level 3 right here, you could have just kept sliding your stop loss down as price kept moving down. So you just keep sliding it, keep sliding it, keep sliding it. You can literally ride this for the entire month and make a killing, guys. Like right here, you keep sliding it to level 3. Price is still moving down right here, sliding it to level 3. You might have gone stopped out right here depending on your spread, but if not, you would have just kept sliding it, sliding it, sliding it, sliding it, sliding it to down here, and then you would have gone stopped out right here. So if you count those pips, so our entry was right here, right? And then we just slid our stop loss all the way down here. You would have gone 60,000 pips trading US 30. It's fucking insane. Like, that's a lot of pips, guys, to catch off one trade if you were just, you know, swing trading this, or, I mean, not even swing trade, you just held it until, you know, you figured out when to get out. But yeah, pretty much, that's pretty much how the strategy works. It's real simple. But yeah, okay, so that's on the 4-hour time frame. Let me go on the lower time frames just to show you guys how it works on there. So let's delete this stuff. I'll just do it real quick on the 1 hour as well. So this was the 4 hour. Obviously, you know, this would be a longer hold for on the 4 hour. If you want to trade intraday, obviously you'd probably trade on the 1 hour. So same situation here. Again, I wouldn't enter these trades over here because just how the, let's see, Spencer said, so you don't have to use the support and resistance indicators for this, right? Like I mentioned earlier, Spencer, it's going to be up to you. You could use it for extra confirmation. You can see right here, if you're entering a sell, or I mean, right now market was just, it was too choppy. So let me just rewind it to over here where market was actually trending. And then you can see right here, as price is coming down and you're waiting for that pullback up. Let's see. All right, so you can see price is pulling back right here. You could have used this to identify, use the other SR, where price would be rejecting from over here. So if I rewind this over here, you can see right here, this is when price started to pull back. So as it pulled back, you can see price is testing these pivot levels right here. So here we get to level 3 up here, right? You can see price came up, tested pivot level 3 over here before it came down. So if you tie those together, you tie this rejection and you tie it with the SR, you know, that'd give you greater confirmation, but it's not 100% necessary. It's really going to be up to you as, you know, personal preference, whether you want to add that extra confirmation to it, because it works perfectly fine without it, as you can see right here. But yeah, so I'll use this as an example since we already have it open. So this is the 1 hour. First, you want to identify that market is trending downwards. So right here, you can see that price was trending downwards because price was below the K2 pivot levels. And then you can see that the pivots are spread out. You can see that we have level 1, level 2, level 3, and level 4. They're all spread out. It's trending down pretty heavy. First 2 requirements are met. Or no, first requirement's met. And then next you want to identify price pullback. So right here, price was trending down. You can see right here, price pulled back a little bit. And then that would fulfill the first 2 requirements. So requirement 1, market's trending. Requirement 2, price pullback. Requirement 3, identify a price rejection off a K2 pivot level. So you can see right here, price came up to level 3 and then it rejected off this point. It rejected off here too, but this, you know, this is irrelevant because we don't have a K2 signal yet. You know, our catalyst to enter this trade is always going to be based on the K2 signal. So right here, you can see price pulled back, rejected off this level 3. So we have the first 3 requirements are met. We identify the market's trending downwards. We identified a price pullback right here. We identified a price rejection off a K2 pivot level, level 3 right here. And then lastly, you want to identify a valid K2 signal. So right here we have a sell signal. It's a valid signal because it's a sell signal with a red bearish candle. And then since all those 4 requirements are met, you can enter on the open of the falling candle. So we're going to enter right here. Place our stop loss at the previous swing, about 6,000 pips. Let's see, 6,000 pips. We can bump that up maybe to 6,100 just to give it some space. So yeah, that's pretty much it. We can let it run. TP, guys, easy as that. So full TP again. You know, easy win. You would have held this for a couple of days because, you know, the market's just not doing so well. So let's see. So let me take this off. And then, yeah, like I mentioned earlier, if you guys want to use the other exit strategy, you know, that actually works a lot better with this indicator. You guys didn't have this indicator before, so you guys wouldn't be able to identify, you know, where to move your stop loss. A lot of people were unsure where to put your stop loss. You know, I actually had this indicator for a while, but I didn't release it till now. I wasn't sure if I should release it or not, but, you know, you guys are family, so I just pretty much released it to you guys because, you know, I might as well share it with you guys. So let's see. So pretty much here, stop loss, if you did what I said earlier, you just followed it off the level 3. So right here, you just kept moving it down, moving it down, moving it down. Price kept moving. You moved it down to right here. You know, you wouldn't have had a bigger win if you just used the normal stop loss like we did earlier down here. But, you know, it really depends on your risk. If you want to, you know, risk it more, where you can make more pips if you just write it down, you know, that could work as well. But if you want to just, you know, execute the trade as we normally do, where we just put stop loss at the previous swing and get the full profit, that's fine too. But, you know, there was a huge difference from this move to here, because instead of getting 6,000 pips, you would have gone stopped out nearly at break even. So it just really depends. You know, if you're lucky, you might get that full move. If not, then, you know, you might get this, but you'll still be in profit. You might be a win. Like, you'd still be in a win. What I'm trying to say, as long as you guys are in a win, that's all that really matters. It doesn't matter how much profit you make. It just really matters that you don't lose. Yeah. Okay. So that's one way of applying it. I'm gonna go real quick. Sorry, guys. I know I'm taking a long time on this, but I'm gonna go back to the lower time frames again, just to give you guys one more example. So yeah, that was the 4 hour. 4 hours previously. This is the 1 hour, and then now this is what you guys have been waiting for: scalping. I know everyone loves to scalp, so let's go on the 10-minute. So let's wait for price to be trending. Price was obviously trending right here, right? Same exact requirements. Like, the strategy is so easy, guys. All right, so let's see. So first, you want to identify markets trending. Right here, price is above all K2 pivots, so price is below it. And then the K2 pivots are spread out to level 1, level 2, level 3, and level 4. So this is a strong trend downwards. Right here, you want to identify. So we identified the markets trending downwards. I'll just rewind this so it's easier to see. All right, so we identified that market was trending downwards because it's clean. This isn't clean right here, guys. So this is what I mean by pivots are spread out. They're spread out like a ribbon. So we have level 1, level 2, level 3, and level 4. Right here, there's too much noise going on right here. There's no way you guys can make any entries off this because you know, price is just going in between. Right here, there's no bunch. The only things that are bunched up are the green and the yellow, which is fine because those are the light, you know, the lighter pivots. But over here, there's just too much mess going on right here. This isn't something that you could identify as a strong trend. But okay, right here, you identified market was trending. It's moving downwards. Next, you want to identify a price pullback. So right here, you can see price went down pretty strong, retraced up, rejected off the pivot right here, came back down, pulled back again right here, another rejection off this pivot. The reason why we wouldn't enter any trades here is because there's no signal. So we would have just ignored this whole area. You know, we would have waited for it to pull back again like it did right here, pulled back, and then rejected off this level 4 zone. Like I said earlier, you know, these zones are leveled 1, 2, 3, and 4. The higher the level, the stronger the rejection. So right here, we identify the market was trending. You identified a price pullback this way. You identified a price rejection off a K2 pivot level, which happens to be the level 4, strongest pivot. And then next, you identified a valid K2 signal. So right here, price rejected, followed with a K2 sell signal. The sell signal is valid because it's a sell signal with a red bearish candle. So once all those requirements are met, you can enter on the open of the following candle. So right here, we enter a sell for our stop loss at the previous swing, about 1,230 pips, and then let it run. Profits harder, you guys. Easy as that. And this works on all time frames, guys. So if you guys want to swing trade, you guys want to intraday trade, you guys want to scalp, it's up to you guys. You know, like, choice is yours. The strategy works on all time frames. But yeah, so that's pretty much it for US 30. I only use US 30 because US 30 is a highly volatile pair. And obviously, you know, if you're going to trade this, you need something that's trending and is highly volatile. So, you know, obviously you're not going to trade this on on Euro CAD or something that like doesn't even move. So, so yeah, so that's pretty much it for US 30. Let me go over the questions again. So let me see if there's anything else that we have here. All right, so Michael wants me to look at EA. So I'm gonna try it on EA right now. Hey Michael, do you have like a specific time frame that you want me to identify it on, or I could go on all of them if you want. It's really up to you. Let me go there real quick. So it's EA. 4 hour and 1 hour, perfect. All right, so let me go on the, you know what? The thing is, let me open another chart because I don't want to. We have active. Actually, let me just check real quick if that trade isn't. There's nothing going on with this trade, so it's fine. So I'll just delete this stuff. I was gonna open another chart, but it's all right. You know, this trade isn't going anywhere. It's going sideways. But yeah, let's start with the 4 hour real quick. You're in a buy. Well, it's moving sideways, so I think you should be fine. But it's under the pivot, so it might go down. But I don't know. It's really gonna have to you know, shoot in a certain direction before it determines, you know, the direction of price. But there's really no there's no direction right now. But all right, we're on the 4 hour right here. So let me just go to this entry right here. This is pretty recent. Put the requirements again right here. All right, K2 pivot strategy. So number one, we're going to identify that market is trending. You know, as I said earlier, we can identify this by making sure that price is below all K2 pivots. You can see right here, price is below all the pivots, and then the pivots are spread out. We have level 1, 2, 3, and 4. That's the easiest way to determine, you know, whether price is trending or not. So number one's met. You know, price is trending downwards. Next, we're going to identify a price pullback. So price was trending downwards pretty strong, and then it pulled up right here. And then you can see there was no rejections like directly off a pivot level, but you know, if it's within this area where it's within the pivots, and then it rejects and it's a strong wick candle like that, then you know that would be considered a rejection. It doesn't necessarily have to be on the actual pivot line. This is just going to confirm that price was, you know, it pulled back, retraced, and then it rejected, and then, you know, odds are it's probably going to correct back to the overall trend. So I'm trying to see an example. You know, there's a lot of times here where price comes up and then it rejects. It doesn't always reject on a pivot line. It'll come up like right here. It rejected right here, but no pivot line. And then it came down. But you can see previously it was rejecting off that pivot line. Right here, there's a rejection, rejection, rejection. It tried to break through. It was probably going to fake out someone to enter a buy because they thought, you know, trend was going to be shifting, but then it came back down. Similar to right here. So you can see right here, price was it was rejecting off the level 2 right here, 1, 2, 3, 4, 5, 6, and then a random breakout up. You know, this was probably a market maker or someone trying to lure people in to enter or buy, because people would have thought that price was going to reverse, or the trend was reversing, but it didn't. It ended up coming back down. So back to our requirements. Number one, we identified that the market was trending downwards. Next, we identified a pullback in the opposite direction because price was trending down, pulled back upwards. Next, we identified a rejection of a K2 pivot level. Like I said, it doesn't have to reject directly off the level. It just has to be a nice rejection. Like it can't just be a red candle, like a full red candle. That's not going to be a strong rejection. We have wicks right here. So it's showing that, there was a strong bullish move, but then it lost power right here because we have a pretty nice wick right here. And then, like a fat doji, I guess. I mean, I don't trade candlestick patterns, so I don't know if this would be considered a pattern, but it looks like a reversal candle. So if you guys are familiar with, candlestick patterns, then, power to you, because then you'd be able to identify this even better. But yeah, pretty much right here, there's a rejection. Next, we identified a valid K2 signal, which was way down here. So right here, we had the K2 signal, and all requirements are met. We had 1, 2, 3, 4, all requirements are met right here, enter sell. Place our stop loss at the previous swing, which is right here for about 172 pips. Let the trade play out. And then this situation right here, this is where you would, depending on which exit strategy that you were using, it was in profit. This for sure would have hit TP1 at least if you set it to where I normally put it, which is halfway. So you're in profit about 130 pips. When you're in profit that much, you have to move your stop loss in profit at some point. You can't just, you can't just hope that it hits full profit every time, because that's not always going to happen. So if you're using the, my normal exit strategy, generally what I do is I put TP1. I don't plan to exit at TP1, but what I do is I set my TP1 halfway. So 172 is a full profit. So we have 172. I divide that by 2, so I get halfway, 86 pips. So my TP1 is going to be at 86 pips. But that's not going to be, I'm not targeting that area. Like I don't have a TP set at TP1. The only reason I say TP1 is because once price reaches this area, I have these alerts right here. You can see on my chart, generally I'll set an alert right there so that when price reaches this point, I move my stop loss to TP1. So this is now my stop loss down here. I've guaranteed this many pips. And this is exactly why I do that, because you can see price came down and then it reversed on me. So if I move my stop loss to TP1, I would have guaranteed 86 pips at least. A lot of people, when they enter the trades, they make multiple trades and they set TP1 at TP1. Technically, I just put TP1 because that's just a benchmark where I want to move my stop loss when I reach that point. But this isn't where I'm putting my TP, because why would I cut myself short when I could go for a full TP? So the full TP was what was it, 172? See, so it got close to TP to full TP, but the thing is, I move my stop loss here, so I could either lock in this much profit or I can get full profit. It's like a no-brainer. But if you're in profit 130 pips and you don't move your stop loss in profit, I mean that's bad on your part, because you weren't using proper risk management with your stop loss. But yeah, that's pretty much how to apply it on there. So that's on the 4-hour. I'll see if there's another entry somewhere here so I can just go over it real quick. Price, so this is the one that we took right here. Price came down and then price came up. There's no sell signal, so there's no entry there. This right here, there's not really an entry either. Right here, it looks like, yeah, so there's an entry right here. So I'll just do this real quick. I'm not gonna go by it in detail. So right here, we identify the price is trending downwards. It's a strong trend from way up here. And we could even enter from up here too. So I'll just mark up entries. So right here, price is trending down, pulled back, came back down, winner right there, 400 pips. Again, right here, it came down, came up, rejection off this level right here. Could have entered right here, another 400 pips. Again, right here, price came down, came up. See, this is where it gets a little a little iffy. I mean, I probably wouldn't take this one right here, even though it was this would have been a nice win, because price came up above all the pivots. So once it comes up above all the pivots, odds are price might be the trend might be reversing. Also, the problem with this too is that you can see right here, once we got that signal, the pivots got all messy. So I wouldn't have entered this trade, even though it would have been a straight winner, because there's, it's a very iffy trade. Again, right here, price came up, price came down. It started a new trend right here, because you can see right here, price came down, and then they spread out. So the first requirement, price is below all K2 pivots, and the pivots are spread out. Although it looks a little messy right here, if you zoom in, it's not very messy, because they're clean right here. It's level 1, level 2, level 3, and level 4. So if you look at it from far away, it looks messy. But if you look at it up close, it's pretty clean right there. See, there's enough space in between each pivot. So right here, we identified that the market is trending downwards. Next, we identified a price pullback. Price came down, pulled back right here. Rejection off the level 4. So market's trending down. Price pullback, rejection off level 4. Identify valid K2 signal. Right here, we have a valid K2 signal. You enter a sell. Put your stop loss here. About 208 pips. Let it play out. Hit. This thing goes on forever. Yeah, so this would be another situation here where you would have moved your stop loss at least in profit, because you're going for 208 pip. That's a pretty big move, and it dropped all the way down to 186 pips. Michael said, and you said to use level 4 level. You could use that, but I personally don't use that because I like to lock in my gains. So the thing is, if you did that, you would have lost, because I mean, see, like in this situation, you're already in profit 186 pips. It wouldn't make sense for you to trail your stop loss way up here, because you're barely even moving stop loss at all. You know what I'm saying? So in this situation, if you're this deep in profit, I would use the other exit strategy. I would use the exit strategy where, so the difference with Euro odd, and here, let me just go back to, let me pull up US 30, because the two pairs move a little differently. If you're trading a US 30 or an indice, that's a pair that you can trail the stop loss on the different levels, because that thing moves a lot faster than Forex pairs. So you can see, so like, yeah, right here, if you enter this trade right here, like every time it moves like 2,000, 3,000 pips. That's like equivalent to like 200, 300 pips on FX pairs. So comparing, US 30, every candle moves like about 2,000 pips. But if you look at EA, each candle moves, a fraction of that, 60 pips. So it just really depends on how you want to approach it. I mean, you can do that, because there was another entry here where you could have done that and it would have worked out kind of nicely, it looks like, or maybe not, because it kept retracing right here. But for Forex pairs, I would just recommend using the normal exit strategy. I would just put a TP1 at 50%, and then once price reaches 50%, I would move your stop loss. So this is 208. 104 would be halfway, 50%. So pretty much right here would be TP1. I'll make another video for this exit strategy. I know I haven't made a video for it yet. I do explain it to you guys, but I know a lot of people still don't understand it. So I'll make another video for that, probably sometime this week or next week. But yeah, like I was saying, so once price reaches TP1, like
hey, Shawn, it's 6, bro.
Okay, let me, sorry guys, let me pull up the, see if there's any entries right now.
Probably not.
Do you see anything today?
Not really.
All right, let me just take this stuff off. Hey guys, let me look up for some entries real quick. See the chat, Aaron?
Who? Michael, don't start.
So Oddcat, no entry. This actually hit our TP yesterday already. Right here's Odd CHF. Yeah, it looks like market is still pretty dead right now. This got really close to our TP1, but he just pulled back. Looks like it was only a few pips away from it. RJPY, this hit TP1 already. Almost TP2. I don't know what's going on with the market. It's just really slow today. Odd Nzd, no entries there. Odd USD. I still think it's coming up. It looks like it's trending down. You know, even with this, I can use the pivots, and we can see the direction of price. This looks messy, but it works. Man, we should call this trade, Aaron. The CAD CHF would hit full TP.
Oh shit, for real? That's crazy.
Yeah, I know. The problem was
I think the support was too close.
it was way too close, so we didn't call that. Would have been a winner. CAD JPY, nothing there.
But the market is really dead. That's crazy.
Yeah, the market's not moving at all. So, is there news today? Let me see. So it looks like there's no news. I mean, there's news at 5:30 a.m. tomorrow, but it's not really anything serious. It's RPC, personal spending. Yeah, nothing really to. I mean, aside from the consumer sentiment, but it's still medium news. It's not really too high impact. This is our Euro odd. Oh yeah, guys, if you guys still have trades open from last week, I think you guys like if they're in profit, like let's see, like odd JPY, you should probably close this trade because we've been holding this trade since it's not that long, 22nd. But there's a couple other trades that we've been holding for like odd USD. We've been holding this since the 12th. So if you guys still have this trade active, actually I closed it out because it reached TP1, like I mentioned before. But there were some people in the group that were complaining, asking about this. And you know, every Friday I always recommend that you guys don't hold trades over the weekend. I got out of this at TP1, way over here. So I got out of this on the 14th. So if you guys are selling this trade, when it goes in profit, I recommend you guys just exit. If you guys just entered this trade from today, you guys can hang on to it till later. But the older trades, you know, there's no point in you holding this for that long. Like they're not meant to be swing trades. The only reason that we've been holding this for so long is because the price just isn't moving. You can see right here, price moved like hundreds of pips. But you know, this week it's barely even moving. So let's see. So this week started on 21st. So from the 21st, price has only moved upwards about 85 pips and moved downwards like 40 pips max. You know, it's just been ranging back and forth. So if you guys are holding old trades from last week, I recommend you guys exit them, you know, when you get a chance. Even EA, like we had EA open last week too on the 15th. And, you know, some people were complaining about this trade, but the thing is you've been holding this trade for a long time. And I recommended last Friday that you guys close it in profit. It's been in profit 1, 2, 3, 4, 5, 6, 7, 8. You know, a lot of times down here. You get so many opportunities to get out of this trade. So I would recommend you just get out of it once it goes into profit. It's at entry right now. So as it moves down further, you know, I would get out of it because the thing is, if you're holding it for that long, a lot of stuff can happen over 2 weekends. Let's see, Euro CAD, and we should call this one too. Well, I think this was too close as well, right?
I think so. Yep, it was way too close.
Yeah, so there's a lot of trades that I had marked up, guys, but I didn't call them because it was too risky. They were too close to the resistance. And this week is it's just been extremely slow overall. So right here, price broke below this zone right here. It's too close. It's less than 20 pips away from the next support level. So that's why we're not going to call that and why we didn't call it. EG, again, it's stuck within the zone. There's not really much going on. EJ is another trade from last week that hit TP1. I know there's a couple of people in the chat from on Monday that were complaining about this too. You know, you guys have to follow the rules, guys. Like when I recommend that you move your stop loss to TP1 when price reaches, then you guys have to move your stop loss. Otherwise, you know, you take on the risk that it could reverse on you. So the thing is, TP1 was somewhere around 120. So TP was around 60 pips. Yeah, same point. So around this point right here, you know, these are 4-hour candles. So you guys had 1 hour, 4 hours, 8 hours, about 12 hours to exit this trade. So if you guys didn't exit this trade at TP1, I mean, that's the risk that you guys took to still be in this trade. It looks like it's coming back down. So if it drops back down further, I do recommend you guys exit this trade because it's just too risky. You know, holding on to it for 2-3 weeks. This would be a valid entry right here. What do you think about this, Aaron? I don't know though.
Which one? You do?
EJ.
EJ?
How are the JPY pairs moving? They
I mean, to be honest, man, every pair has been consolidating, so I wouldn't even be too confident about this trade.
yeah. So we're not going to call that. But if this moves in profit,
Stronger bearish candle than maybe, but
the other one.
it's like a little doji close below the support.
Yeah.
Doji head ass.
Yeah. If you guys are still in EJ, I recommend you guys exit it when you get in profit, because yeah, you don't want to be holding trades for that long. And when I told you guys to close trades on the weekend, when you're in profit, you guys should close the trades. But yeah, like right here, it came down, dropped about 60-70 pips. There's a lot of opportunity there to exit this trade. Your NZD, it's inside a zone. We're not going to take that. EU, this is the same EU from this morning. Looks like it's dropping back down right now, so it's looking good. GA, there is I don't know. What do you think about this, Aaron? Same situation. I don't know because of.
I wouldn't get into this one either.
Yeah, guys, like the market is just slow right now. There's no point. Like literally, we have an edge because we know the direction of momentum, but the problem is there's no volatility in the market. So even though we know the direction of price, there's no point in taking a trade because the market movers can spike price in the opposite direction if they want to. So you're kind of just a sitting duck. You're waiting. You're just waiting to get killed off basically if you're just entering a trade when the market isn't moving at all. But now that you guys have the new indicator, you guys can scalp that. You guys could still make money that way. But, I wouldn't hold on to a trade very long during these market conditions. Honestly, I don't see anything. You can see these candles barely move. Look at this. Geez, like GCAD moved like in like 8 hours. It moved like 15, well, less than 15 pips. It just doesn't, it's not worth taking the risk because you don't want to be stuck in this trade. Not just Friday, but over the weekend. Like you're gonna get screwed if you hold on to this for that long. There's no entry there. Let's see, nothing there. Nzd CAD. See, this would have been a decent sell, but it was too close to the support right here. So if you did enter this, you probably would have gone out at the support. Nzd CHF. This hasn't even filled. Maybe we should cancel this one. What do you think?
Yeah, man, it's been moving way too slow. We should just cancel it.
Yeah, let me send a message real quick. Yeah, guys, I call that trade like at 6 a.m. It hasn't even hit entry yet. It's been 12 hours. Nzd CHF. All right, I sent that out, guys. So if you guys still have that open, I'm gonna forward this to the premium group. All right, so I'm gonna cancel this trade. Just gonna delete all this stuff. Yeah, prices literally moved 5 pips for the past 12 hours. Let's see. All right, so I close this. I'm just gonna delete all this stuff because we're not watching this anymore. It's not worth watching at all. Close this. Hype drip said it was gone for a minute. Have you already looked at the first signal? Not yet. So I'm gonna pull that up in a little bit. I'm still going down the questions. I'm just looking for trades right now because the 4-hour candle closed. But I mean, there's no trades to take right now anyway, so it's not a big deal. Let's see. Nzd Jpy. This is another trade that was from last week. We hit TP1 over here. So if you guys still have this open, I recommend you close it once it moves in profit. Even though I think it's coming down, there's just no volatility in the market, and there's no point for you to hang on to a trade that could do anything literally from now until the weekend. So I'd get out of that trade in profit. I think our Nzd USD, this trade hit TP1 because I don't have the alert on here anymore. So generally if it hit TP1, the alert would have went off. So I think we hit TP1 on this. So if you guys are in Nzd USD, I would exit this in profit. You know, it's at a strong support anyway, so there's really no point in you hanging on to something that that wouldn't be that good, because you know the odds are it's probably just going to keep ranging between this zone right here, these two zones, and you don't want to exit in the negative. So just exit now if you guys have Nzd USD still open. UCAD, it's inside a zone, nothing worth taking there. Uncheck that. There was an entry here for USD CHF. I went over this with Aaron, but I don't think it just didn't look like a strong trade. It looks like it would have hit TP1 somewhere around here. But yeah, it's pulling back down, so it's not really a good trade. So yeah, guys, I looked over all of the pairs for the 6-hour candle close. I mean the 6 p.m. 4-hour candle close, but there's just nothing to take right now. So if you guys are looking for trades, you know, this might be a time for you to just sit out the market, maybe practice your strategy, or you know, prepare for next week, because there's literally nothing to take right now. You can see prices barely moving for every pair, and it's just not worth taking the risk. So let's see, OddCAD real quick. Yeah, OddCAD's looking real good. So we still have wait, Aaron, did we close this? Oh, it hit full TP. Yeah, actually, so it hit full TP yesterday for me. I don't know if it hit full TP for everyone else, but if it's still active, I mean, it's still good. I would just move your stop loss to TP1 at least, if you guys haven't already, because we've already marked this as a full TP yesterday. Spencer wants us to look at USD Max. Yeah, pull that up real quick. I think it might be Max USD, no? USD. Oh, MXN. Yeah, so it looks like we do have a sell signal right here. Let me this is an exotic, so I'm not gonna call it, but I'll just mark it up for you if you want to take it, Spencer. Let's see. Yeah, there's actually a good sell signal here. So if you guys are looking for a trade to take, this is Spencer's baby. He's pretty good at trading USD MX, the peso. Yeah, hide this. But yeah, there's an entry right there. You can put a sell stop right there, Spencer, if you want to take that. Down a lot. It's a 3,000 pip move. I don't know how this pair is measured because I don't trade exotics, but you know, me and Spencer went over this, and there's a lot of good entries that could be taken off this exotic. So if you guys are trading exotics, you know, this would be a good sell entry right here, if you want to. You know, not required, but I'm not going to call it on the official because I'm not familiar with the pair, so I don't want to give out trades that I'm not 100% about. But yeah, guys, give me 1 second, guys. I'm gonna get some water. I'll be right back. All right, guys, I'm back. So let's keep going over the strategy. So if you guys have any other questions, feel free to put them in the Q&A, and then I'll get to them. So let's see. So Michael, we went over euro odd on the 4-hour. I'll go down to the 1 hour real quick, so we can just look over the strategy for you. Smart. Take all this stuff off. 1 hour. I'll make it a little quick because I know we have a ton of questions here, so I'm just gonna zoom through it. I'm trying to find the strategy. Okay, there you go. I'm gonna copy this. So we're just gonna identify, you know, when price was trending. So right here, you can see price is trending on this side. All right, so this will be pretty easy right here. So first we identified that market was trending. Market's trending down right here. We identified a price pullback, so price was trending down. It pulled back right here. And then there's a rejection off the level 2 right here. So the first 2 requirements are met. Next, you want to identify, or sorry, so that's number 3. So number 1, price is trending downwards. Number 2, there's a price pullback right here because price came down, pulled back. Number 3, we identified a price rejection right here off this level 2. And then level 4, you want to identify a valid K2 signal. So right here, we have a valid K2 signal right here. It's a sell signal with a red bearish candle. So all 4 requirements were met. Next, we can enter on the open of the falling candle. So we enter right here, and there you go, full profit for 147 pips. Yeah, pretty much easy as that, guys. Let me keep going down to the Q&As because we still have a whole bunch here. Patricia said, K2 indicator seems much smoother and shows a better trend. So that was an addition to the alligator question earlier. Another one, anonymous attendee. Can you go over using it on previous London Open at the 10-minute chart? I think that was the same person from Hyperdrip, right? Yeah, Hyperdrip. So I think that this was for US 30. So let me go to US 30 real quick. Let's delete this. Delete this. 10-minute. All right, so the London Open. Perfect. We already have it set up right here. London Open today is the 25th. All right, so the London Open was right here at midnight. So there was no entry after the London Open, but right before it, there was actually an entry right here. So if you check this out right here, we're identifying the market was trending. Obviously, it's trending down right here because price was below the K2 pivots, and the pivots were spread out. We have level 1, 2, 3, and 4. They're all spread out. Next, we identified a price rejection off the K2 pivot level. So we're going to identify a pullback. So price is trending down, pullback, correction, pullback. So I'm just going to mark this right here so we can see where the open was because he wants to see. So there's no entry after it, but right before it, right here, there was an entry. So at 11:40, so 20 minutes before London Open, there was actually an entry right here. So we identified the market was trending down. We identified a price pullback, so price came down, pulled back, came down, pulled back, came down, pulled back right here because price was trending down, so it shot up, pulled back right here. Number 3, we're going to identify a price rejection off the K2 pivot level. So right here it came down, shot up, rejection off this level 4 right here. Next, we identified a valid K2 signal. Right here, we have a valid sell signal. It's valid because it's a sell signal with a red bearish candle. Pretty much all requirements are met. Next, we enter on the open of the falling candle, which would be right here. And there you go. Hit profit target on London Open. So we would have entered this trade. It would have been active right before London Open. gave you a little head start before the market opened, and then it shot down, and then it hit 1,300 pips right here, straight TP. So yeah, that works pretty good. All right, so let me keep going down the questions. I don't know if there's anything else you guys want me to cover on this one, but I'm just gonna keep going down. Okay, so let's see. Next one is from Spencer. So Spencer said, later on, can you show the indicator with gold? Perfect. So let's go to gold real quick. Delete this. We will go over to gold. All right, so we'll go on gold on the higher time frames first. So pretty much right here. So let me go back to same requirements, guys. All right, so right here, price didn't start trending till right here because they started to spread out. So number one, you identify that market was trending, price is above all K2 pivot levels, all K2 pivots, and the pivots are spread out. So the pivots weren't spread out right here, so we wouldn't consider this trending yet because the red was still over the orange. But right here, you can see as we continue to move down, price was still trending upwards. So we would have skipped this right here. Let's just skip to this area because price pulled back right here and then it pulled back up. So the market was still trending from down here to, let me just visualize this for you guys. All right, so clearly, price was trending right there. Just to give you guys, a better visualization as to the trend. If you guys don't see it without it, let's delete that because you guys already saw that. So identify that price was trending upwards. But using these requirements, we identify that price was above all K2 pivot levels, like it was right here. And then we identified that the pivots were spread out. So right here, as you can see, price came down and then it came up. And then at this point right here, the pivot levels were level 1, level 2, level 3, and level 4. I know it looks like it's consolidating, which it probably was. But the market has just been weird this week, so this might not be the best example, but I'll just use this just for now, just to show you guys that it still works even when the market isn't trending super heavily. But if the requirements are met, it can still work. You can see right here, the green line's above, the yellow line's right here, the orange line's right here, and the red line's right here. So although it looks like it's consolidating, technically this would classify as market trending upwards because price was above all K2 pivots and the pivots were spread out. There's space between the green and the yellow right here. Although it doesn't look like it's spaced out very much, technically it would still apply. Even though I wouldn't take this trade, I'm just telling you guys that it's still valid. So pretty much we identified the trend. So price is trending upwards. We identified a pullback. So price pulled back right here, came up, pulled back again right here. So price was going sideways, pulled back right here below. And this is one that I probably wouldn't take because price broke below this. So that what would happen here is I would wait for it to pull back into correction and then look for another entry right here. So let's just skip this, even though this would be a valid entry right here, because look, it still would have won regardless. You put a stop loss right there for about 2,000 pips. That would still be a winner, but it's a risky trade, so I personally wouldn't have taken that one. So you can see right here, it still would have won regardless. But let's just skip that because I don't like taking risky trades, so I'm not going to recommend you guys do either. But we'll skip that one. We'll just start over again right here. So we identified price was trending. Right here, price was above the K2 pivots, and the pivots were spread out. We have the green line right here, the yellow line right here, orange line right here, and the red line right here. So it's trending upwards. We identified a pullback. So price was going upwards, pulled back right here. And then this is what I like about this pullback right here opposed to this one, because price pulled back right here, but didn't close below all the pivots. Right here, price closed below these pivots. So, this gives chance that the trend could be reversing. So I wouldn't want to take these right here. This is a different story because price got close to it, but it didn't close below like it did right here. This was way below the pivots. Right here again, way below the pivots. Right here, not so much. So we identified price was trending upwards right here, even though it was in a strong trend, it was still trending upwards. We identified the price pullback right here, and then we identified a price rejection off the K2 pivot level. So we have a rejection right here, 1, 2, 3, 4, 5, 5 rejections right there. And then we identified a valid K2 signal. So right here we have a valid buy signal. It's a buy signal with a bullish green candle, so that'd be valid. All requirements are met right there. We enter a long position up on the open of the falling candle, which would be right here. Place our stop loss at the previous swing, which would be somewhere around here, or it could be down here. It's really up to you. But yeah, we'll round that to about 800 pips, 1800 pips. And then obviously it hits TP. So it's as easy as that, guys. So right here, this might be setting up for another entry, Spencer, if you're watching this. So right here, you know, price is trending up pretty strong. Price is coming down right here. It's rejecting. You know, if it rejects off any of these, if it rejects to like level 3 or level 4, and then we have a valid K2 buy signal, you can take another buy going that direction. But just with the way the market's moving right now, that there's just, I mean, the chances of that happening are not very likely. Let me see if there's another entry over here somewhere. There's no entry right here because we don't have any buys. Yeah, gold just looks messy. If you just look at this from a bird's eye view, it doesn't look nice at all. Let's see. So this would be an entry right here too, but actually it's not a valid one because that buy signal isn't valid. But okay, right here, this is perfect. This is like, this lines up perfectly. Okay, so this is actually a way better example. So right here, I just wanted to show you guys here because, you know, I didn't want to show you guys that I'm not being transparent. Like I'm showing you guys even the bad trades. Like it still works even with the bad trades. I'm not just pinpointing perfect trades because I haven't even looked at gold yet. So here's another trade right here. This is actually a really good entry. Right here, we identified prices trending upwards. Next, we identified a price pullback. So price shot up, retraced right here. This is a pullback. And then identify a price rejection off a K2 pivot level. So right here, price shot up, shooting in the direction of trend, pulled back right here, rejected off the level 2 about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times. So that's a strong support area. So we identified the trend, we identified the pullback, we identified the rejection right here. Next up, we want to identify a valid K2 signal. Right here, we have a valid buy signal because we have a green buy signal, and it's a green bullish candle. So pretty much right here, all requirements are met. Enter on the open of the falling candle right here. And there you go. You would have won gold for about 3,000 pips, 3,600 pips actually. Not bad at all. Let's see if there's another entry. I'll leave it on there. I don't need to delete it. Let's see. I want to see if there's one more that I can probably just show you guys. Again, right here, I mean, you can even just bird's eye view it. Another win right there, 5,000 pips. There's one right here. This is a loser. I mean, I'm just being transparent with you guys. You know, this doesn't win 100% of the time. You know, I'm not trying to show you that it wins 100% of the time. There's going to be losses sometimes. But let's see, so stop loss right here. It's not that big of a stop, of a loss actually. It's only about 2,400 pips. So I mean, if you calculate this with all the other wins, so this would be about 5,000 pips. But if you want to make it realistic, 2,600 pips. So if you won that trade, so say you won that trade, 2,600 pips. A loss right here for 2,400 pips. Let's see if there's anything else here. Nothing there. Another win here for 3,600 pips. You know, if you just trade this overall, you know, obviously there's going to be losses. You just have to eat those losses when they happen. It's inevitable. But if you keep applying the strategy, you'll come up in profit almost every time. Like at the end of the month or the end of the week. So right there, 5,000 pips. I'm just zooming through, guys. I'm not really breaking it down, just to show you guys, you know, what's possible. Another entry right there, another 3,000 pips. But yeah, you guys get the idea. I want to go down to the 1 hour chart now, just to show you guys what's going on that one. And the thing is, there's a lot of strategies that you can apply. You know, these aren't the only strategies that work. There's a lot of strategies that work. The real key is that you have a strategy that works and you use proper risk management. I mean, those are the two main things. You don't have to use the K2 strategies as long as you have a good strategy and use proper risk management. You know, you're perfectly fine. Okay, so let's get through this right here. So this is the 1 hour chart for gold. You identify the market is trending. Obviously, it's trending right here. Next, you identify a pullback right here, it pulled back. And then next, you want to identify a price rejection. So market's trending, pullback, rejection right here. You know, it didn't reject directly off a K2 pivot, but I mean, technically it did. So this didn't reject off, but this one did. So 1, 2, 3, 4 rejections right there. 3 requirements are met. Next, you identify a valid K2 signal. You have a valid K2 buy signal right here. So after that, you enter on the open of the following candle right there. And there you go. Winner for 1,200 pips, 1,236 pips. Or actually, this is gold. So gold is this is 123 pips. Yeah, not bad at all. So that's a winner right there. Again, right here, price came down, or yeah, price came up, came down, same requirements, price was trending up. There's a pullback right here, rejection up the K2 pivot, you know, level 3, valid K2 buy signal right here, enter a buy, and then you probably would have exited at TP1. So right here, you know, it's close to full TP for 123, 24 pips. But you would have exited at halfway, or if once it reached halfway, like 600 pips or something, like right here, you know, you had a huge opportunity here to move your stop loss. Like if it's way up here, you don't move your stop loss. Like I'm not really sure, you know, what else you could have done to lose this trade. Because even though it came back down, it shot up right here, and it was up here for 1, 2, 3, 4, 5 hours. If you didn't move your stop loss in 5 hours, I mean, most of you don't even sleep 5 hours. So you know, being asleep isn't going to be an excuse. Just set an alert there. If you're not able to monitor your trade, just set an alert right here. You know, click add alert, and you know, set your alert there. Just put move gold stop loss. It's not that hard, guys. You know, a lot of people use that excuse that they're sleeping. You know, if you're sleeping, then exit your trade, because you just can't leave your trades unattended and then be mad that you hit stop loss, because you know, you have to understand the risk when you're taking these trades and you're going to sleep, because a lot of things can happen while you're asleep. Like right here, you know, price went up and then it reversed at about 5 a.m. You know, if you're in the US, you're probably asleep. So if you're going to be asleep during this time, you know, move your stop loss to break even or in profit. It's, you know, it's as easy as that. But all right, guys, so that's gold. Let me keep going down. I just don't want to keep going if I miss this. Let's see. Okay, so we have Joe. So Joe's still here. Yeah, so Joe's here. So Joe said, so the pivots are not moving averages, talking about the curves. Hey Joe, so which curves are you talking about? Are you talking about the lines? So these lines, they actually are moving averages. They're exponential moving averages. So that's why they're dynamic, because as price moves, you know, it moves with price. It's not like set in place. So if you look at our K2SR, these are set in place. They're not dynamic. They just, you know, once the resistance and support is established, it stays there. The difference with the K2 pivots is that it moves with it. So as price moves, the pivots move as well. So let me just show you how that works. So let's rewind right here. You know, you can see it was all messy right here, right? So I'll zoom out. You know, price is all messy, and then as price moves above, the pivots move with it. And you see those rejections? Like, this is like magic right here, guys. It's like, you can see exactly when price rejects off them. It's not hard to notice. You can see price rejects off them perfectly. And it gives you a ton of opportunities to enter trades. And then see price comes down, and then if it comes down and it establishes the trend downwards, you know, you can take a sell as well. Yeah, Joe. So yeah, so these lines are based on exponential moving averages. You know, just to make things simple. Keith's asking the same thing. Yeah, Keith. So yeah, these lines are EMAs basically, but they're based on a ribbon. So you know, instead of just having one moving average, you have, you know, all of these moving averages moving along with each other. Let's see. I'm going to keep going down the. Joe said, "How do you get the take profit so quick using TradingView? How do you set it up? Just press one click and it gives you." Yeah, Joe. So pretty much what I generally do, because I don't really have time to set the stop loss unless I want to set it at a specific point. What I do is I just I'll zoom out, click the zoom out button, and then what it does is, so let's see, if I wanted to enter. You don't even have to zoom out. So say if you wanted to enter this trade right here, like I discussed earlier, you just click on the problem with not zooming out is that the chart's only going to take this data into consideration. If you want to determine what the swing is way out here, you zoom out, and then it'll take all this data into consideration when setting up the profit target and stop loss. So if you want to incorporate all this data, your profit target and stop loss is going to be wide, obviously, because it's going to incorporate all its data. So you just click the long tool, and then you enter right there, and then it sets it up for you. You know, so let's see, I'm just going to show you for example. Right there, it's like 1700 pips, right? So if you move it closer like this, and then you do the same thing, it's going to give you a smaller stop loss because it's only taking this data into consideration. And this is based off, it pretty much bases off the swing with, and I can't remember what the indicator is called, with ATR. So ATR on the swing, you know, TradingView automatically calculates it for you. And you know, obviously I would just go with what TradingView provides because, you know, their numbering calculations are going to be, you know, far superior than mine. Unless you want to put it at the previous swing like I normally do, right here, you can do that too. But if you want to get, you know, the most accurate stop loss, you obviously want to incorporate ATR, the ATR, or yeah, average true range. That's what it's called. So you'll have to do that, and then on top of that, you add the average true range, and that's why TradingView has. That's why they're able to calculate it for you when you zoom out. So if you zoom out, it'll calculate the previous swing with the ATR, and it usually works pretty good. But yeah, okay, so there goes gold for you guys. I don't know if I missed anything with gold. You guys find anything else? But let me keep going down the questions. Hype E-drip has for US30. So yeah, I looked at that. Let's see what else we got here. All right, Kyle. Is Kyle still here? Kyle's not here anymore, but I'm going to go over it anyway. So he wanted me to check Euro CHF, see if I can find anything there. All right, so he wanted me to check out Euro CHF. I'm not sure if Kyle wanted me to check that, you know, just normal analysis or with the strategy. But looking at it with the, you know, with the new strategy, it's obviously trending downwards. I think this would be a sell. We did cover it too during, we also covered it, you know, trying to determine if there is an entry here. There is an entry here, Kyle. I mean, you're not here anymore, but I'm just gonna, you know, speak on this. You might be on the YouTube. But yeah, pretty much there's an entry right here. But the problem with entering this right now is that the market's not moving. It's just, you know, it's stale right now. So I wouldn't enter this, even though there's a valid entry and even though it might drop, because, you know, once London opens, it can literally go in any direction. So I wouldn't want to risk holding a trade when there's nothing going on. You know, if price is moving, then yeah, it'd be great to enter it. But you know, at this specific point in time, I personally wouldn't enter this trade because of that specific reason. But, you know, if you're applying the strategy here that I just discussed, you it works perfectly fine here too. Let's see if I can. All right, so we identified. So this would be a little bit of a risky trade because price broke up above here. So I wouldn't have taken this, but this would still I mean, if you wanted to be risky, it would qualify as an entry because it was trending down. It was spread out. There's a heavy trend right here. Actually, no, there wasn't because it crossed. So let's just skip that. Actually, let me go over here. This would actually be a good entry right here. This price trending up. Price. Yeah, I think it would still be fine because this was a temporary pullback. So price is trending up. We get a pullback right here. So price going up, pullback right here, rejection off this level 4. We identified a valid buy right here. In our long position, winner, 82 pips. Easy as that. But this is probably not a pair that I would use a strategy on because it doesn't really trend very often. I mean, it does trend, but it's not a highly volatile pair. You can see there's a lot of noise that happens with EUR/CHF because they're both, they're both European pairs. Similar with like EUR/GBP, they don't really trend or move, and they don't move directional. They're kind of just a sideways pair. But yeah, okay. So let me go to the next question. Let's see. Bobby said, "Does it work with gold?" Yeah, it works with all Oh shit, sorry, I don't know if I clicked on anything. Okay, I think we're good. Yeah, so it works with all assets. I haven't tried it on certain pairs because this strategy is based on trend continuation and momentum through using both indicators. So it works on pretty much everything. It doesn't have to be used on just one specific pair. It works with indices. I went over US 30. It works on gold. Maybe it'll probably even work on cryptos too. It works perfectly on cryptos. Look at this. Where's Aaron at? Is Aaron still
Right
here?
here, bro.
Bro, look at this on XRP, bro.
You see?
Money.
Bro, crypto, they move too slow for me now, man.
Yeah, I know, but it still works. So like it came down, retraced right here, rejected off the level 1.
Mm-hmm.
We had a valid sell right here. Boom, winner, 54 pips. Again right here, pulled up, another sell right there, winner. Another 54 pips. I mean, it works on everything. There isn't really anything stopping it. Again, right here we have a buy. Let's see, another buy right there. Another winner again, 52 pips. But yeah, I personally, I probably wouldn't use this on crypto because there's just too much noise. It doesn't look like something that, yeah, I wouldn't even trade this. I mean, it still works, but I personally wouldn't trade on there. Just because the way it moves. But yeah, let me keep going down. Let's see. Sam said, can we quickly go over all current positions to see if pivots have fully switched on us? Potentially save some losses. Oh, that's a good idea, Sam. I didn't even think about that. So yeah, Sam's still here. Yeah, Sam's still here. Perfect.
Hey, good one, Sam.
Aaron was being sarcastic.
Hey, so Shawn, are you trading mainly off the 4-hour time frame with the new indicators?
No, not really. I mean, I personally like it because there's just less noise. I could catch stuff a lot better. And I just don't want to be on the chart all day. But it works with pretty much everything. Shit, we had a buy for. We had a buy for a. Oh, that's why. So the problem with this, Sam, right now is that it's kind of hard to tell because you can see by looking at the new indicator, there's no real direction because it's just messy right now. It's going sideways. I think we have a buy for on CHF, right, Aaron?
Yes, I think so. Yeah, it's from last week, right?
Yeah, I'm gonna pull it up real quick just so I could chart it. I think I deleted it when I was going over.
The
So,
market's been moving crazy, man. Yeah, on CHF is so close to hitting TP #1, huh? Like 5 pips away.
that's 5 pips away. Yeah. Okay. So this was on Monday, 21st. I think it was right. I don't know. I'll put it right there. Okay. So the entry was Oh yeah, because I still have it marked up. Okay, so it was right here. 73 pips. So it's hard to tell for odd CHF because it's literally just going sideways. Um, but it can break above right now because it's just literally going back and forth. So it's really hard to tell for odd CHF. Let me just lock this. I don't want to. Odd JPY. And did I just delete everything? Oh, I swear I had this on here. Yeah. Go back. Odd JPY. Yeah, odd JPY actually hit TP1, so but I'll mark it up anyways just in case. So we had a buy, I think it was somewhere around here, right? 22nd. Yeah. Entry was 73,612. Profit level was 88 pips. 88 pips. Same situation here, Sam. I think all the odd pairs are just going sideways right now, but we are in profit. And we do have a buy signal right there, so I think it's going to continue up, but I mean, it's just going to be hard to tell. Odd USD looks fine. I think, is James in here? James is in a buy for this. Not in here right now. Yeah, not James Hess, the other James.
Which James? The
Jay the newbie.
OG. I mean, yeah, OG James, truck driver.
Uncle James.
Uncle.
Uncle James. Yeah, James entered a buy for odd USD, but price is below the pivot, so I think it's going to keep down. So I think we're good with that. Your odd price is also below, so I think we're perfectly fine with that trade as well. Your JPY, we're in this for a sell, perfectly fine right there. It looks nice. Your USD, nice. It's perfect. So everything looks pretty fine, Sam. I mean, nothing looks, yeah, even with Nzd Jpy below the pivots, looking good. The only ones, yeah, also for Nzd USD, the only weird one that we have are odd CHF and odd JPY. It's just, they're just moving sideways. Like literally they're moving within the pivot. So there's no real direction that's been sent. James, did you guys confuse me all the time in the chat?
What do you say?
James Hess, the other James, he's my friend from law school. James said you guys confuse me all the time in the chat. Did Jay hit you up, Aaron?
He hit me up regarding. I told him to hit you up about the Instacoin thing.
How do I draw money? Because I never have. Okay, I'll tell him a little bit, or just tell him that he has to do it through Bitcoin. That's all he has to do.
Oh, he could withdraw through Bitcoin.
Yeah, because if he did deposits through Bitcoin, he has to withdraw that same amount through Bitcoin before he can do any other form. Do you get what I'm saying?
Oh, yeah, okay, I see.
Yeah.
So I'll hit him up right now.
Yeah, it's not that difficult, but yeah, he's gonna have to do it through Bitcoin. Just do a Bitcoin withdrawal.
Okay, I sir, I got you.
Yeah, but Instacoin they don't do withdrawals, so you just tell him to send it to his Bitcoin wallet. Like tell him to download Cash App or something like that.
Okay, all right, I'll text him right now.
All right, so let me keep keeps asking you everyone on the indicator. Still going over right now. Let's see. Sam's asking NJ, NU, AC. I think there may be one or two more that y'all sent out. Yeah, pretty much. So we have odd CAD that's, or no, not odd CAD. That hit TP, that hit full TP already. So odd THF, all the odd pairs are just weird. But NJ and NU, they look perfectly fine. We do have a sell, and it's below the pivots. Once we get a sell signal, this is actually gonna be a nice setup because we do have it trending down. This is the little pullback right here. It rejected off level 4. So if we get a sell right here, sell signal, we can see this dumping, and then we have a sell inch. We have a sell position, so that's looking good. Valid entry right there. Same situation right here. It's not trending yet. If it keeps moving down, then it'll start trending like it has over here. It just needs to keep pushing down so that the EMAs can cross each other and move down further. Let's see what else we got here. EU. Yeah, same with our EU over here. This is actually looking real nice because you can see that the the pivots are starting to spread out. So as they spread out, price is going to continue downward. So if you look at other patterns here where price has crossed, so this is kind of like the same pattern right here. So price crossed from the green up here, and then it came down pretty heavy. It took a long time, but it still came down. Let's see if there's another. Again, right here, the same situation. See right here, price crossed at the green, and then it shot down super heavy. And if just by looking at charts, it usually repeats itself. Again, right here, price crossed from the green, and then it's starting to shoot down heavy. It might be ready for a dump. So if it dumps down, let's hit those CPs. All right, so let me see what else we got here. Michael said you said you use level 4 and level 3 to track stop loss. Yeah, so with that, it's really going to depend. It's a case-by-case basis, Michael. It's not something that I personally would use, but if you're a swing trader, it would be good because you can trail it. So this is an example right here. If you entered this right here, you could have just trailed it from this level 3 all the way up, which is good. When it hits, it fucking hits, bro. Like, look at this. When it hits and you rode this all the way up here, you would make over 400 pips. The thing is with me, this doesn't fit my trading style because I don't really like holding trades for this long or going for the whole month. I want to just take my profit and get out and go to the next trade. I'm not the type of person that wants to hang on to this for days. Even though it's going up like this, like crazy, this is going to test my patience and it's going to drive me insane. So I'm not gonna want to hang on to this for, how long is that? 9 days. It's not even that long, honestly. I mean, yeah, maybe I would do this for maybe half the time, maybe 5 days. Wait, actually, because it counts the weekend, so technically this was like 3 or 4 days. So actually this wouldn't be that bad, but there's some trades where they go on for like a whole week, or some stuff like this happens. Like this is something that I would hate for to happen if I was trading. Like if I entered right here and I was trailing it from this level 3, and then price spiked up right here. You have to remember that the market makers know where your stop loss is. So if they spike it up like they did right here and manipulate the markets, you're going to be screwed because you could have exited down here for profit, but you wanted to use that strategy and you would have gone screwed. So it's really by personal preference, but that's just not the way I would trade. I was just explaining a way that you could exit if you wanted to. Personally, myself, it's not my trading style, so I wouldn't. I personally wouldn't do it. Josh said, "Hey, we hold and news trade for, and USD trade for 10 days." Yeah, I remember that, Josh. You forgot to take off your stop loss. You got lucky with that one. Yeah, that was a crazy trade. I remember you were tripping out about that, but I'm glad that played out perfectly for you. So let's see. Bobby's asking, how does it work with gold? So we went over that earlier. Right here, Joe's asking, how do you get, okay, so we went over that earlier too. Anonymous attendee, so what if all requirements meet for the strategy and it's a sell? If there was a false signal in between the pullback and the price rejection, would that, no. So it would have to be a valid entry. So I'm gonna look for an example when it was a valid entry, but it was, so if it was an entry, but it was an invalid signal. Let me see if I could find. It's really hard to find an invalid entry on the invalid signal on the 4 hour, or on the 1 hour. All right, so we're on the 1 hour. Let me zoom out, make it a little easier. Okay, so like right here. So this would be an invalid. So all requirements are met right here, right? Because price is trending down. We have a pullback right here, or so it's coming down, pullback, coming down, pullback again. Actually, this wouldn't be a pull. So this would technically be a pullback right here, but see, this is an invalid sell signal we wouldn't take that, because if you did take that, you would have lost because price pulled back. If you waited till we got a valid signal right here, it'd be a win. So that's why I don't take trades even though they're invalid, because they're invalid for a reason. So like right here, if you were to enter this, you would have technically you wouldn't have lost, but you would have been scared because it would have pulled back super far. If you just waited for it to pull back even further, reject off this point, and then get a valid signal right here, this would be perfectly fine, because right there, TP for 30 pips. And that's basically why this would make it valid. This would make it not a valid entry. This would make a valid entry, because this is one of the requirements. Requirement is that you have a valid K2 signal. Let's see. All right, so we have one more anonymous attendee. He's asking, is the K2 SR indicator necessary with the pivot and momentum indicators? So it's necessary with the momentum indicators, because the thing is, if you don't have the momentum indicators, you wouldn't know when to enter the trade. You would just enter blind trades. So say if you followed all requirements, but you didn't know when to enter a trade, because you don't know which direction price is going. So you can see right here. So price, so this is going to be if you didn't have the indicator. So right here, it looks like a very nice downtrend, right? So it's trending downwards right here, but you're just using, the pivots. You're not using the real secret to every strategy we use is the momentum indicator. This is the catalyst for every single entry. If you don't have this, you don't have an edge in the market, because literally you don't know when to enter a trade. Because here, let me take this off right here. Right here, this looks like a very nice downtrend. So obviously, once you see a rejection, you might want to take a sell, because you're like, okay, it came down, retraced up, rejected, enter, rejected, came down, pull back, rejected, enter, pull back, rejected, enter, pull back, rejected, enter. And then look what happens here. See right here, you would have gotten faked out, because it came down, pulled back, rejected right here off level 3, a really strong wick. You would have entered a sell right here, because you would have thought that, oh, it worked right here. It's been going down. Of course it's not going to go up, right? Wrong, stop loss. So, you could have paid your 50 bucks and got the indicator, or you could have paid a higher price and took a loss. I mean, it's just as easy as that. It's a huge difference that the indicator makes, because it tells you when to enter a trade. There's no sell signal here, so you wouldn't have entered a sell. But if you didn't have if you didn't have the indicator, there's no way that you could have identified this if you're entering blindly. So I'll just show you again. Right there, it looks like a perfect sell. If you didn't have the K2 indicators, any other person would have taken the sell right here, because they would have saw a rejection. But if you had the indicators, you wouldn't have taken a sell, because there's no sell entry there. See, and then right here, take another buy, another winner. So if you had the K2 indicators, you'd have, let's see, you'd have like 1, 2, 3 wins right there, back to back to back, 3 wins. So if you had those 3 wins right there, and you're taking a standard lot, that's what, 33, 37, 37. So 33 plus 37 plus 33, and then you multiply that by $10 per pip, you would have made $1,000 off that, paid off your K2 subscription for the year, and then unlimited profits moving forward from there. So yeah, I mean, it's as easy as that. There's 3 back-to-back wins right there, easy wins at that. So yeah, short answer to your question, you're going to need the K2 indicators to apply this strategy. And I wouldn't recommend, trying to make your own, trying to copy my indicator, because there's a bunch of people that have tried that before and they failed miserably. They don't trade anymore because they lost all their money. So, I mean, it's up to you if you want to go and try and make your own indicator, but there's no way that you can copy this, because this isn't something that's based off anything else. This is something that, you know, I created off my own code. But let's see. All right, one more question from Galaxy Note 10. Can we look at UJ? It looks like it's trending down. So let's go to UJ real quick. So UJ looks like it crossed up above the pivots. So this might just be a small retracement upwards. But we won't know until it establishes. So you can see right here, once these start to spread out, so we have level 1, 2, 3, and 4. Once they spread out, it turns into a nice trend downwards. Right here, these haven't spread out yet. So once the red comes below here, let me see if I can draw. Here, do you know that tool that has where you can draw like a curved line?
Let's see.
Nah, I don't think so. It's fine.
I forgot where it should be. Where the horizontal line should be at.
That's what I thought. I don't
Right
see
there. Oh shit.
it. Anyways, I'm just gonna, so we want this red line to be below here. And then, so once this moves below here, then it'll start trending like it did right here. Like you can see, once the red line crossed everything above, everything started trending down, similar to right here. Once the red line, so the red line was right here, once it crossed below everything, it started trending up. Again, right here, once this red line crosses below all of the other pivots, then it'll start trending upwards. But if it just, you know, if this is just a minor retracement and this red line moves back above all the pivots, then we can expect it to continue downwards. So, you know, it could either come up and then retrace back down like that, or it could just keep continuing up. Right now, currently, it just looks like it's so even looking at the trend meter, it's in consolidation right now. It's just moving sideways. Just pretty much like every other pair, you know, there's no pairs right now that are really trending heavy. You know, you can literally go down every pair, and there's literally nothing that's moving directional at this time. So personally, I would wait for this to establish before, you know, you decide to take anything. But yeah, I think that's it for our questions. If you guys have any other questions, feel free to put them in the Q&A. That's our last question from the day for the day. So yeah, if you guys want me to cover anything else, feel free to put them in. If not, I'll be available in the Telegram if you have anything specific you want me to answer or cover. Otherwise, I'm gonna start working on the videos soon, the strategy videos for this, you know, this new indicator, so that you guys could start applying it yourself. I mean, you guys saw me applying it, and it's super simple. Like, you know, those requirements are just a little more detailed than they really need to be, just so you guys can understand it. But this video is going to be on YouTube, so if you guys want to watch it later, you guys are more than welcome. You know, there's a lot to cover. But yeah, guys, I think that's about it. We've been on this call for about 2.5 hours now, so I'm gonna get off for a little bit. But I'll be available in the Telegram. So if you guys have any other questions, feel free to reach out. If you guys need more examples, I can help you guys out. Otherwise, I'll talk to you guys in the chat. All right, guys, I'll talk to you guys later.